Happy Saturday, everybody. Lawrence Yun just came out and said prices may buckle if certain conditions are met. And he was talking about Texas and Florida, but could we apply what he said to Tennessee? We're going to take a look at it because I got to tell you, there's some pretty shocking similarities. Now, we are going to look at all of Tennessee, but we're going to zoom in on Nashville, of course, because that's what I cover. And believe it or not, there is a retirement community in Nashville that appears to me to be crashing. I'm going to show you why I think that, what is happening, and then you guys decide. You guys make your own decisions. Half the time I tell you what I think, and then I read the comments, and you all come up with pretty insightful commentary that may or may not be anything about what I was thinking. So I really enjoy the comments that you all leave, the perspective that you have. At the end of the day, this is a journey of understanding what is currently happening in our market and how we can apply it to make better decisions about buying and selling. And I hope that's what you get from these videos. So without further ado, let's take a look at the data. Okay, first things first, Anna Wong posted this pretty shocking. She said, by the end of the year, cumulative non-farm payrolls for 2024 likely will overstate true employment by more than 1 million. Now, Goldman's saying the same thing. They say that the preliminary estimate of the benchmark revision to non-farm payrolls will show a downward revision as large as 600,000 to 1 million. Now, the truth is it's quite obvious. You don't need to look at the unemployment to know that affordability is stretched right now. It's stretched because prices have been stagnant for 2 years now. Interest rates are actually lower than where they were a year ago, and yet there are fewer people buying today than were buying last year. That tells you that incomes are stretched for the prices that are out on the market, and certainly that's a downward pressure on prices. Now, will it be prices? Will it be income? Will it be interest rates? How will we get back to affordability? I don't know, but certainly it's hard to imagine that prices aren't part of the process, even if that just means appreciation is limited over the next 5 or 10 years. Prices could remain flat for the next 5 years, and affordability could come back through income growth. Now, if we get a recession, obviously that changes the story. Now, Lawrence Yun said something really interesting. He said a quick turn of events in the past few months, big increases in inventory in the South, check, that's Tennessee, especially in Florida and Texas. The supply is now quite plentiful. Now, he didn't say this, but we're back to 2019 levels in a lot of markets. I'm going to show you this in Tennessee here in a second. These two states have had one of the fastest job gains, also Tennessee. The demand should therefore be solid. If home sales do not pick up, then home prices will have to buckle. Whoa, that's a dramatic statement coming from the chief economist of the National Association of Realtors. We're going to have to come back to that. We're going to have to look at Tennessee. If we are getting inventory at 2019 levels, but demand is sagging, it's showing that prices have to buckle under the pressure, and that's exactly what he's saying here. So let's take a look at Tennessee. Here we can see this is inventory, active listings, this is Realtor.com data, active listings compared to where they were in 2019. Look at Nashville, up almost 1,000, 40% above where it was in 2019. That is dramatic, guys, dramatic. Notice the surrounding counties are not nearly up like Davidson County is. In fact, in Williamson, down almost 25%. Wilson, down 16.5%. Sumner, down 10%. Rutherford, down slightly, just 2%. But the point is, outside of the core of Nashville, supply is still very limited. Okay, look at Knoxville. Knoxville's down 315 compared to where it was in 2019. That's a 22% lower in Knox County. But look at Sevier. This is wild, guys. Sevier up 700 listings, 137%. It's more than doubled from where it was in 2019. Sevier is certainly one to watch. This is where the Airbnb crash, ground zero. It's very clear it's happening there. Look at Memphis, up 32%. Now let's go to demand. Nashville's demand is down 18.5%. So think about that. Pending listings for July are down 18.5%. in Davidson County, Nashville's core. Okay. We have 40% more inventory and we're down 18.5%. And I know this argument's been debunked, but for the longest time, people were saying, oh, we need more inventory. That's why there's such low volume. Okay. That's just false. We do not need more inventory. This is proof. We have 40% more inventory in 2019. Our pending listings are almost 20% lower in Davidson County. Guys, this is a very clear communication. Prices at these levels are quickly becoming unsustainable, okay? It is very, very high risk. Now, this is Davidson County. It's less so in the surrounding counties, but the price pressure here is in Davidson County. Almost a 20% drop in pending listings with a 40% increase in inventory compared to 2019. That is massive. Look at Knox County. Knox County, 20% drop. Sevier County, 22% drop. Absolutely wild, y'all. Absolutely wild. Now, Chattanooga, before you think it's hotter here, this is clearly a data issue. It's showing that pending listings in 2019 were 56. We know that's just not true. So I think this MLS down here, whatever connection it has to realtor.com, is not accurate. It's just not accurate. I don't know what else to say. If you would have told me this was happening, if you'd have said, Ethan, inventory will be up 40% from 2019, pending volume would be down 20% from 2019, prices will be hovering at an all-time high, I would thought you were joking. I would have said, man, prices are going to free fall. They're not free falling, okay? Now, they are dropping. It is a little bit larger than seasonal, but I got to tell you, at this point, even our contract prices are hovering above where they were last year by 1% or 2%, okay? So it's basically right now, we're in the flat area. Now, will we end the year lower? I personally think it'll be close, but I personally think it's a very strong possibility. We're not there yet. Okay. So our pending contracts are still 1% to 2% higher, whether you look at price per square foot or whether you look at median price. It's still hovering above. So either concessions have to be larger or that contract price has to come down for us to actually get year-over-year negative. We're in the middle of August. So, the closings here wouldn't really be into September, and then you're going to get reported on October. So there's really only November and December left to see a year-over-year negative. It's possible. It's going to be very close. It's going to be very close. I'll keep you updated, though. I'll keep you updated on that. Now, let's take a look at this neighborhood. So this is in Franklin, just north of Franklin. There is a neighborhood. It's a 55 plus retirement community. And you can see that there's a lot of active listings here, And so, of course, I was like, well, does it always have a lot? Like, what are these prices? What's the trend? What is happening? And so I pulled out my little neighborhood tracker here. 9 active listings, none under contract. Okay. We've had 14 closed in the last year. So we're quickly heading towards a year's supply. What's happening here? Well, we look at historically, 9 active listings is the highest I have going back all the way to 22. And we can see the next highest point was in October of 22. By the way, 22 was kind of not a great year for prices. At six, and look at the contract volume. Only 0 are under contract. We've got 4 price cuts and 9 active listings. Now, I called an agent today, say, hey, what's the story? Like, is there something going on with the HOA? Like, what happened here? Of course, he said that he's not aware of anything, but, it looks pretty bad if you're asking me. Now, what do I do in these situations? Well, I plot everything all the way back to 2005 just because I'm obnoxious and I want to see what happened in 2008. Like, hey, what was the crash in 2008 like here? So I actually did that for this condo or this neighborhood, this retirement community. And believe it or not, in 2007, prices peaked around 320 to 330, okay? 325, let's say. You can see them, they're all right here, okay? They dropped all the way down to around 250 is where we were here, 250. So that's a 20% drop. And that took all the way to 2012 before prices started coming back up. So in 2012, prices had dropped 20% from where they were in 2007. That's a shocker of a drop. But look, let's go to 2024. Okay, look what's happening. Prices peaked in the spring, summer of 2022. People were paying $700,000 for these condos. $700,000 someone paid for this condo. Unbelievable. And look, prices have been just straight down ever since. So even though, Nashville may be at an all-time high median price, even though Williamson County has been a scorcher in terms of prices going up, there are some massive weak spots. There's some neighborhoods that have been crushed. And certainly this is one of them. We're now hitting mid 500s where we were at 700, where our median price was around 630. We're now already down a solid 10%, hitting about 550 for the median price in this neighborhood. Now, we did have one close at 595 in August, but it's more of an outlier than these other ones. And I got to tell you, if I'm buying in this, what's 20%? What's 20% off of 630? Because that's where I'm betting prices go for this neighborhood, or at least that's kind of the safety net. That puts you right down to 500. So look, if I'm buying this neighborhood, my educated guess is prices are going to drop to 500. Okay, it just looks like that. It's certainly, when you look at this chart and you can see you have 9 active listings with none under contract, the absolute worst it's been in 2 years, chances are prices are going to continue dropping. So where am I offering? I'm offering from 500 to 550 in this neighborhood if I'm offering. Now, I did have a buyer that I'm going to reach out to. I'm going to say, hey, look, here's a neighborhood. I like it. We got to explore the HOA. But I have a buyer that was looking. That's why I found this neighborhood. You can see wild swing though. Look at that, straight down. Don't just think because prices are at an all-time high, it's everywhere. It's not everywhere. That's what I hate about these charts. They're like, prices only go up. No, they don't. No, they don't only go up. Now, there aren't good rental comps in this neighborhood. This neighborhood is a 55 plus community. And if you think about it, a 55 plus community is going to be more on the forced seller side. The chances of people living in this neighborhood and either moving into an assisted living facility or passing away are much higher than an average neighborhood. And that leaves more of an estate type sell happening here, a lot more. And so you would see, prices be at a higher risk in more. It's not a forced selling. It's not like they're getting auctioned, but they do have to sell these. And it is in a much more urgent matter, and that's exactly what's happening here. So pretty wild to see this play out. My opinion, personal opinion, not offering anything over 550 for any of these. If I'm buying, I'm expecting prices to continue to drop over the next year, maybe down to 500. Does that mean you shouldn't buy one? Yeah, it's a personal choice. If you're looking for a place to retire, you're going to be there for the next 10 years, and you could buy one with cash, you're certainly getting a better price than people did a year ago by 10%. Could it drop another 10%? Sure it could. Sure it could. But the fact is a lot of the appreciation or price drop has happened already. So you're already getting a much, much better deal than people in the spring of 22 when I was begging people not to buy, by the way. I would just expect price to continue to drop, but depending on your situation, unless of course you're buying much closer to 600,000, which, it's your choice. There's a lot of listings there. You can buy at 600,000 if you want. I mean, look, there's one for 625. You could buy this one. I wouldn't recommend it, but that bathroom looks pretty nice. Maybe you don't care. Up to you guys, up to you. Everybody has their own situation. They know what they need. They know what they want. They know what they can afford. Just make sure you do the math and don't overspend. And with that, I hope you guys have a great weekend. I look forward to seeing you next Saturday.